Hi everyone. Today let's talk about Apple and their new savings account. And then we're now in earnings season, so we do have to talk about the earnings for today. We'll talk Fed rates just for a moment. Then we'll go over options expiration for Friday. Then we'll look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So let's talk about Apple savings. I do want to highlight we talked about the Google versus Microsoft story this morning, so definitely check that video out from this morning. It really goes deep into that story, which is very relevant for the markets. Right now. But otherwise, looking at the Apple savings account, you can see they're offering 4.15%, which is a very respectable number. And they also have the daily cash card, the Apple Card, which offers up to 3% back on purchases. I'm sure there's restrictions there. It's not 3% on everything, but 3% is very respectable. Hopefully it's at least 1% on everything else. Of course, it's not the best out here. Citibank is now offering 4.75, but you have to have a minimum balance of 5,000. Goldman Sachs offering 3.9% with no minimum or fees. And then VioBank offering 4.77 with no minimum. Of course, there's some risk with these fintech banks, especially with banks that use smaller regional banks as their industrial bank. So 4.15 is very respectable, especially in a larger institution with no minimums. And the main highlight here is that Apple is really starting to push more into the financial space. Obviously, a savings account is important and it will make them money, but it's not a huge change to Apple. It's the fact that they continue to push into this sector and make their presence felt, and how will they be able to compete in this space? Or will Apple just eventually be the only company that does anything and everything will go through them? Definitely interesting to see how they continue to expand into new spaces. Moving over to earnings for today, you can see Charles Schwab came out, topped earnings, but missed on the top line. So not too bad. They did have a lot of outflows. We did expect that. It's been pretty widely known by the markets that they were going to have some outflows. And so far, that's not affecting them. It probably will affect them in next quarter's earnings. But hopefully this will give some reassurance to investors that Charles Schwab is still an institution that can be trusted. Overall, not too bad for them. Not much else here today. Couple of different financial institutions having some pretty mixed results. MT Bank did well, beating on the top and bottom line. Maybe that's something to look into. And then moving over to tomorrow, you can see J&J, Bank of America, Netflix, Lockheed Martin, and Goldman Sachs all tomorrow. Everything's in the AM except for Netflix, which is after hours tomorrow. Netflix has a very high implied volatility, and they usually have a pretty big move on earnings. Last time they outperformed massively and reinvigorated their growth in terms of subscribers. And if they continue on that path, we could see Netflix go much, much higher. Definitely something to watch with them. Otherwise, not much else here. We have Interactive Brokers is interesting, United Airlines. And then moving over to Wednesday, obviously, we have Tesla, the big heavy hitter for Wednesday. Morgan Stanley, fairly interesting. IBM, also interesting. I'm definitely curious to see what happens with Tesla with their recent price cuts and see how that affects the broader markets. Moving over to Fed rates here just for a moment, you can see we're just about 2 weeks away from the meeting, and we are almost all the way locked in here on this 25 basis points. Continues to move towards that 90% range. At this point, we're pretty much guaranteed to get 25 basis points. And then looking at June, we continue to drift higher here on that pause statistic. And if we don't get the 25 basis points and the pause in June, that's definitely going to be very negative for markets. Maybe we get an early pause. That would be crazy. But with probabilities like this, it seems very unlikely. And then moving over to max pain for options here, you can see max pain is all the way down at 402. I don't think we're going to go that low. But look at this put call ratio, 3.04, super high. Absolutely tons of options in the market, almost 4.5 million options, 3.3, almost 3.4 million of those are puts. Highest call strike, 415. Highest put strike, 370, all the way down here. Super unlikely that we're going to get that low. I could honestly see a close right here at 416 just to ensure that all of these puts end up worthless. We've had a couple of closes that are like that, where you have calls kind of right in the middle here. You drift just to one side of a call peak, ensuring that all of these put options end up worthless at the end of the week. And there are tons of them, absolutely tons, and that's going to affect the markets for sure. Doesn't mean that we can't close somewhere in here from like 406 to maybe 414. Absolutely possible that we get a close like that, but it wouldn't shock me if we ended up right in this 416, 417 zone. Moving over to the charts here, starting off with the S&Ps. Really, the thesis hasn't changed since the weekend video. You can see we basically went sideways, made a slightly higher low from the previous low, and a slightly higher high from the close on Friday, but we're still lower than the peak on Friday, so we're still going sideways. You can see what that looks like on the 4-hour chart. Still a very strong uptrend. Still looking at that 414.69 level, which we wicked on the Friday open. If we can get above that level, then we're probably going higher. But right now, it does look like we're kind of stuck in this zone just below resistance. Remember, the options say that there's not a lot of downside potential because there are so many puts in the market. So this could absolutely drift higher. Do have to keep that in mind. But there's definitely some overhead resistance to be watching in the short term. Moving over to the NASDAQ on the 15 and the 4-hour, you can see similar thesis. We've been sideways for 3 days. And really on the NASDAQ, we've been sideways all the way since 31 March, just drifting sideways in this area. You can see we did establish a low, and now we're holding in this higher zone on the 4-hour chart. Momentum slightly bullish. Bounced off of the SMA one more time on RSI. Basically no volume here today, which is definitely not what you want to see if this is going to have follow through. And there was also a little bit of buying here at the end of the day. If you look at this 15-minute chart, we were drifting higher in terms of buying at the end of the day. Definitely interesting to see. Maybe we're setting up for a bigger breakout. If we do break out from this level, we need to be on board. There's certainly a couple of percentage points of upside before we hit major trend resistance. So keeping an eye on this in the short term, but so far we're still consolidating sideways. Moving over to the Russell and the Dow here on the 4-hour chart. Starting off with the Russell here, you can see we've been drifting higher. We're at resistance once again, 179.17, watching this level. We wicked it early in the session and got rejection back down to the SMA and VWAP. If we break this level early in the session, I will definitely be buying into that move. That'll be interesting going into tomorrow. If we do get a breakdown back down to 177, I'll be looking to get back in that level. So watching this as my decision point for tomorrow's session. Russell looks pretty bullish into this move, but like I said, key resistance here. Got strong rejection at this level in early April. We've tested it multiple times here, waiting to see if this is a break or if this is another rejection down to support and then we get a break. Otherwise, looking at the Dow, you can see we're still pulling back. Tested the 21 EMA here on the 4-hour chart, found support, rallied into the close, established a slightly higher level from the pre-market level, and does look fairly strong going into the close. It's also worth noting that there was smaller volume here today as compared to yesterday. Russell volume fairly even. Dow right at the SMA in terms of RSI and does look weak. Definitely worth mentioning there. Versus the Russell here continuing to go higher as we cross through that SMA. Definitely looks more bullish on the Russell. Moving over to Apple and Tesla, you can see Apple did not do much today, continuing to go sideways like the major indices here, continuing to hold this support line. Does look like maybe we get a breakdown from that level tomorrow. That would be interesting, down to 163 or so back at this previous support. That would be a high, lower high setup, and then we're starting to see that fall down. If we establish a lower low versus this previous low, then we're going to be in a tough spot and definitely looking bearish. Right now, still holding sideways, still stuck in this wedge. Momentum drifting into bearish territory. RSI not showing us much of anything. Moving over to Tesla, you can see similar thesis, continuing to go sideways for multiple days. Tested that 188.50 level, got rejection from there after hitting the 55 and 144 EMAs. Came almost down to that 182.09 level that we've been watching. Didn't quite get there and then rallied into the close. If you're going to trade Tesla, looking to see if we can get above 188.50, but I would guess that we're probably going to consolidate until we hit Tesla earnings. Moving over to Google and Microsoft, since they're going into battle right now, you can see that huge red bar that we got on the announcement this morning, hit the 55 EMA just for a moment, and then rallied up to the 21. Looks like a move down, lower high setup, and then a bigger move down. That's what I'm expecting here on Google. Honestly, I'm a little bit surprised that we bounced off of this previous low in the 55. I thought we would probably cut through that and start to look down to this 101 level. And that's really what I would be looking at in terms of a potential area to buy if we do get a nice stabilization in that area. Looking at Microsoft here, continuing to drift upwards, continuing to hold this trend line here. If we get above 189.70 hold of that level, then we're probably looking to some new highs. We continue to get above it just for a moment and then break back down. Did that again here today, broke back down to support, which continues to hold here. So looking at a rising wedge, setting up for a potential breakout here on Microsoft. Moving over to consumer staples versus discretionary, you can see staples continues to chop sideways right at this 75.40 level. Every time we close above that level, we then end up breaking back down to around $75. And then we bounce back up. If we do hold above this level, I'm looking up to $76. The wick high going back to Wednesday the 12th. We also have a next higher level up here at 77.50 if we can break out of this range. So looking at 76 and then 77.50. Discretionary also showing a little bit of strength here today. We're in that resistance area. We got above that trend line that I was watching. We're now deeply into this zone, looking to the upper level of that zone around 149.36. That's right around the previous high going back to 31 March and 3 April. If we get above that level, then we're looking up to 153.90 as your next potential zone. So overall, still short-term bullish, but you do have to remember we are coming off of this much higher high in this zone. And if this ends up setting up to be a lower high based on this previous high, then we still have more bearish price action potentially to come. And it is worth noting, even as we approach this price action, you can see the RSI read from that level was 70.22. And right now we're sitting at 61.65. So if we get into the zone, we need to see if there's divergence on relative strength. And honestly, it looks like we're probably going to get that. I do want to highlight just how much volume we had as we were in this zone. Big selling volume as we came out of it. Now we're getting back into that area. Volume is starting to fade as we continue to rally, which generally means that rally might fail here pretty soon. Moving over to energy and healthcare, you can see both of these are actually moving lower, which is interesting. We were watching this 87.37 level for a while. This was the key level going back to the peak from 6 March. We came right up to that level, wicked it a few times, and now we broke down. We're below the 9 EMA, as well as VWAP and the 21 EMA here on the 4-hour chart. You would expect this to come back down at least to the 55 EMA, down around $85. Momentum, bearish. RSI, bearish. It does look like energy is getting ready to go a little bit lower after the big move up that it had. Healthcare also established a slightly lower high. Still in this zone, but it does look much weaker. Momentum is bearish and RSI is bearish on weaker volume. So it looks like money's flowing a little bit out of security right now, which is definitely interesting to see. Moving over to transports just for a moment, I want to highlight this rising wedge is continuing here. We're right at that resistance point, waiting to see if we break out on this third touch. If we do get that move, then we should see markets going a little bit higher. But if we do break down from here and break this structure, we might see some lower lows down to around 217 or so. That would be very interesting here. But rising wedge, still consolidating, right at resistance going into tomorrow's session. Moving over to semiconductors just for a moment here, you can see we're watching this head and shoulders pattern. Found a little bit of support at the 200 SMA on the 2-hour chart. It's very close to our support level at 248.10, as well as the 55 EMA here on the daily chart sitting in that zone. Still looks like it's rolling over to me, which is interesting. You can see on the 2-hour chart, we're below the 55 and 144 EMAs. And for most of the session, we were below the 9, the 21, and VWAP as well. This is slowly trending down, and it looks like the shorter time frame structure is about to break. And once we do start to get more of those time frames to break down, we should start to see a little bit more follow through. Overall, still looks bearish. You can see lots of bearish momentum here. But keep in mind the bullish structure that we had coming to this zone. So it might take a little bit longer to consolidate before we get that bigger breakdown and a retest of the 200 SMA all the way down around 221 or 222 or so. Moving over to yields just for a moment, no change to the thesis. We saw a nice double bottom form here on the 2-year yield. We're continuing to rally here. Same thing on the 10-year. Not as clean of a structure, but definitely a double bottom looking move. And now we are moving higher. Makes sense after looking at the Fed futures. Higher rates are likely to come, and right now the bond market is pricing that in. Moving over to percent of stocks above their 20 and 200 moving averages. You can see here we're still consolidating right at resistance. Momentum is fading. RSI definitely looks weak on the 20-day average. 200-day average established a lower high based on the previous candle, and we're waiting to see if this is going to continue to roll over and maybe move back down to resistance at 52.37, or if we break that level, come down to the 21 EMA at 49.84. Overall, though, this 200-day average does look like slowly topping and starting to roll over on the daily chart. Momentum is confirming that. RSI still going higher, but slowly. And you can see we did get a lower RSI read on today's candle. Moving over to the dollar here on the 4-hour and the daily chart, you can see not much has changed. We continue to channel down in this zone, getting very close to resistance, wicking that trend line here, waiting to see if we can get above it. Daily chart looks like we closed below it. If we get another breakdown here, that would be interesting. But we are above the SMA on the daily chart, and we might see this continue tomorrow. Momentum is ticking in the bullish direction, and bearish momentum, even on the moves down, continue to fade in strength. If we do break above this level, you can see 103.64 is my next higher level of resistance. We also have the 144 EMA and the 200 SMA sitting just above us here on the 4-hour chart as well. So watch these levels. Next higher resistance at 103.64. Moving over to TLT on the 4-hour and the daily chart. We talked about this potentially being an island reversal setup on the weekend video, but based on momentum, we thought this could go lower. And then we had the trend line here, and that's basically where we ended up. So we have the gap and then another gap here. Makes sense after looking at yields and their potential setup to go higher. And this is basically the inverse of that. So we had a double bottom on yields and we had a double top here on TLT. And this is likely to continue lower as long as yields continue higher in the short term. Moving over to the VIX here on the hourly and the weekly chart, continuing to highlight this trend line that we have broken here. We are continuing lower. We established a lower low here today. Momentum's bearish. RSI is slightly higher though, even with lower prices, so we're starting to see a little bit of divergence on the lower time frames, indicating a potential setup here on the VIX. Remember, there are tons of puts in the system, so I don't think it's going to happen this week, but next week it does seem like this is getting set up to move higher, so keep an eye on the VIX. Not much has changed here yet, but it does seem like we're starting to get a little bit of divergence for next week. Moving over to my accounts, you can see I made a few dollars. Started trading this as a range a little bit better, which worked out fine. You can see I picked up a couple of puts and one call once again, which seems to be my classic trade right now. Those puts turned out great. These puts hopefully turn out great tomorrow. Qs ending up right around that 319 level, just up a little bit. It does seem like we're at resistance, so I have a 320 call to help cover to the downside a little bit. We'll see what happens on that. Otherwise, IWM, I had a 177 put. I rolled this up from 176, and that ended up working out as well. The IWM continues to look strong, and like I said, if it does break out here tomorrow, I'll roll into a covered call position because I do think the IWM is showing more strength versus the other major indices right now. It does seem like a decent trade. So watching this one for a potential trade tomorrow. Otherwise, continuing to trade NASDAQ in a neutral position. Let me know down in the comment section what you think of Apple or the Microsoft and Google battle. Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.